Hello, very good morning to all, and welcome to today's daily dose of market insights. I hope that you guys have a great week and ahead, weekend before, not ahead. Today will be a brand new week. Good morning. Today will be Monday, 22nd of April, 2024. I'm Kelvin Wong here, the senior market analyst of OANDA Asia Pacific. So before we start our usual daily dose of market insights for today, let's have a quick look at the disclaimers first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monitored Authority of Singapore. Okay, so before we jump straight into the short-term technical outlook for today on the various cross asset classes ranging from the major stock indices, the major US dollar pair, as well as two key commodities that we covered in our daily dose, which is spot gold XAU/USD, as well as WTI crude, which is West Texas oil. Let's have a recap what has taken shape over last Friday and as well as in early today's Asia session right before the start of our daily dose today. So over in the US session, the major US stock indices continue to shape that negative feedback loop in our expectation, and on a daily basis, the major stock indices that got hit primarily will be the one that is heavily weighted on the mega cap technology stocks, where we start to see the Nasdaq 100 actually underperform with a negative 2% return on last Friday, the SPX negative 0.9%. The Dow Jones Industrial Average fared much better. So the Dow Jones Industrial Average on last Friday managed to inch a gain of 0.56%, together with the Russell 2000, which is the small cap stocks, gaining by 0.24%. But what I want to highlight for you all is the generals, which is the SPX and the Nasdaq, especially the Nasdaq 100, the one that is leading the fort in the among the major US stock indices, primarily driven by a heavy concentration on the AI optimism team play that kickstarted late last year. So Nasdaq 100 actually closed down negative 5.36% for the week. So that was actually the weekly return of negative 5.36% for last week. And last week weekly return of negative 5.36% is the worst weekly return since the week of 31st of October 2022. And also the SPX 500 also got hit as well. For the week, they ended with a weekly loss of negative 3%, and that was the worst weekly performance of the S&P since 6th of March 2023. And who is the culprit that causes this we call it lackluster performance on the Nasdaq 100 and the SPX. So if you look at my screen over here, let me share with you all very quickly, is the performance of the semiconductor, primary Nvidia. So Nvidia actually declined negative 10% in a day. All right, so that's pretty much substantial, negative 10% in a day on last Friday. And it actually dragged down the mega cap 7 stocks as well within the technology and communication services space. And if you look at for the entire week of last week, by the 1 week performance, so this is actually a heat map of the S&P 500, you see the mega cap 7 stocks are deeply in the red. All right, so there is actually no signs of any one of them gaining positive on a weekly performance basis for last week. And the worst hit was for sure the Nvidia, down negative 13.6%. And the clear thing over here is that there is actually no catalyst in terms of firm-based catalyst that kickstart that dragged down Nvidia stock on last Friday, but it's more primarily driven by its rather high valuation in terms of optimistic push up. And do not forget, Nvidia earnings will only come in next month, not this week, next month. All right, so And the primary reason of this risk of this overvaluation in Nvidia, that means optimism in terms of their price action versus their so-called earnings, fundamental earnings potential, is also the risk of higher cost of funding. As we know that I've been highlighting, the US 10-year Treasury yield is a key intermarket component that impact the stock market, the FX market as well. And what we could see, the 10-year US Treasury yield has been holding much pretty firm above the breakout level of 4.5% since the breakout 1.5 weeks ago. All right, and last Friday it tested and managed to shape a push up and close near the end of this session. So what we could see over here is a rather firm upward moving US 10-year Treasury yield. If this momentum continues to remain strong, as depicted by the RSI is not showing any signs of bearish divergence. It could potentially see a retest of that 19th of October medium-term swing high that was printed last year at a 5% level. Above it sees 5.25% next. So what we could see over here is a potential upward trajectory of a 10-year US Treasury yield that is still intact, but bearing in mind that what we could see over here is that we could potentially lead to a higher cost of funding environment, which could also potentially trim down the earnings growth potential of the equity space. So that actually explained to us why the major US stock indices have a rather lackluster performance in the last 2 weeks or so, and that actually transformed into a negative feedback loop globally in terms of the major global stock indices that faces this negative drag downwards as well. And for sure, the dollar continues to remain firm on last Friday. Neither here, it's still holding above the support level, even though it traded sideways, and pretty much sideways movement for spot gold as well. For spot gold, due to the fact that there is no clear signs of further catalyst in terms of geopolitical risk premium in the shorter term, that we start to see a sideways movement in spot gold, and WTI crude oil price remains in a sideways we call it a configuration as well on last Friday. So last Friday over here there is no key economic data to highlight, but I want to highlight something interesting this morning over here. So this morning at 9:15 p.m. we do have a key benchmark interest rate announcement from China. So China, there's actually a various interest rate to watch. One of the interest rate to watch would be the loan prime rate. So this loan prime rate, both the 1 year and the 5 year, 1 year is more on the consumer tied to this consumer loan. 5 year is more tied to the housing market, loan in the housing market. So the China benchmark, the China central bank PBOC still maintain their interest rate at 3.45% and 3.95% respectively for both the 1 year and the 5 year loan prime rate. So indicating to us they're still in the stance of unreluctant or reluctantly not going to actually unleash a very strong, forceful monetary policy easing stance to actually jumpstart the Chinese economy. So they're pretty much happy by a piecemeal basis. So that also explained to us going forward, we do not expect any strong kind of we call it a major basing formation that could take shape on the related China stock indices like the Hang Seng index. Right. So yep, that's about it in terms of the key economic data releases. So now let us now jump straight to the short-term technical outlook for today, starting from the major stock indices. All right. So starting with the Nikkei 225. So the Nikkei 225 tumbled on last Friday, almost hit the alternative target with the support level that we highlighted, 36,650, and as well coming very close to this gray line here. So what is this gray line? So this gray ascending trend line support is pretty key. Why? It's considered as a major trend line ascending support level. Ascending trend line support level, pardon me, is where I link up from the lows of 4th 30th of October tested on 4th of January this year, and right now is coming close to this 36,650 as well, and as well correspond to the former medium-term swing high area of 23rd of January, all pointing at 36,650. Okay, so graphically speaking, we do have a significant support level coming at 36,650. So with that, I will not be so aggressive of flipping to a bearish bias for today on the Japan 225, i.e. the Nikkei 225. So I rather have a neutrality stance, neutral for today between 36,650 and close to last Friday's swing high at 37,650, which is the former minor range low of 18th of April and 17th April broken down, turns into a pullback resistance right now. So neutral between 37,650 and 36,650 for the Japan 225 for today. Hang Seng Index, which is the Hong Kong 33. All right, so let me expand my screen so that you guys could see. Okay, so for the Hong Kong 33 index over here, last Friday it tumbled and hit our support level as expected before shaping this strong bounce in today's Asia session. And you realize that today's strong bounce also got rejected again at the 20-day moving average. So that actually indicating to us momentum is still not so positive at this juncture. So with that, I'll be using 16,650, which is close to the 20-day moving average, which is formerly the minor congestion area over here of 5th of April and 8th of April. And if you do the Fibo retracement of the last push down, taking from the high of 10th of April all the way down to last Friday low, that also corresponds close to the 50% Fibo retracement level. So as long as 16,655 short-term pivotal resistance holds for today, we will still maintain that short-term bearish outlook on the Hong Kong 33 index. First support level to watch will be at 16,290. A break below 16,290 exposes last Friday's swing low area at 16,135/16,070. Only an hourly close above 16,655 will invalidate the short-term bearish bias to see another round of choppy corrective bounce. Next resistance level to watch will be at 16,850, followed by 17,160/17,230. We also confluence with the key 200-day moving average acting as a resistance at that area as well. All right, German 30, which is the proxy for the European stock indices. So German 30 also tumbled last Friday and hit close to our support level at around 17,450. So with that, it's managed to actually reintegrate back above the 50-day moving average in today's Asia session right now. So with that, a bit of mixed element coming into the picture. So we will flip to a neutrality stance on the German 30 between 17,950. So that's last Friday a high, and last Tuesday swing high as well, conferencing at 17,950, and neutral between the lower limit will be 17,550, which is last Friday minus swing low. So neutral between 17,950 and 17,550 for today on the German 30. Major US stock indices, starting with the Dow Jones Industrial Average, which is the US Wall Street 30, banged down and hit the support level at 37,390 on last Friday before retracing, and right now it's still kept below the upper limit of this minor descending channel that I drew from the 1st of April, with the RSI now coming very close to the overbought region again. So no change, still using 38,340 as my short-term pivotal resistance for today, still maintaining that short-term bearish bias on the US Wall Street 30. So first support level to watch will for today will be this area here. Pardon me, sorry, will be this level here at 37,690. A break below 37,690 potentially exposes last Friday minus swing low area at 37,390. All right, so that's for the Dow Jones Industrial Average or the US Wall Street 30. Only an hourly close above 38,340 will negate this short-term bearish bias to kickstart a minor counter trend rebound scenario to expose the next resistance at 38,060, followed by 38,930, which confluence with the 50-day and the 20-day moving average as well. Now, Nasdaq 100. So Nasdaq 100 continue to actually trade within this rather steep descending channel configuration that I drew from the minor swing high of 15th of April. So price action managed to hit down and hit our support level last week. We highlighted on Thursday. Bear in mind that Friday we do not have that daily dose. All right, so at around 17,030. So no change in terms of the technical configuration. Still maintain that short-term bearish bias with a tightened key short-term pivotal resistance for today at 17,390, which is confluencing also with last Friday minor swing high, and as well as the upper limit of this minor steep descending channel. Next support level to watch will be at 16,900. A break below it exposes 16,720, which confluence with the Fibo extension cluster level, and as well as the minor congestion area of 16th of Jan and 18th of January. Only an hourly close above 17,390 will kind of negate this short-term bearish bias to potentially kickstart a minor counter trend rebound scenario to expose the next resistance at 17,500, followed by 17,690. All right. So to sum it up, pretty much mixed bag for today on the major US on the major stock indices. All right, across the globe. Now let us start with the major European FX pair against the dollar. So looking at the euro dollar. So euro dollar, we still have that bearish bias pretty much intact. Bearing in mind on last Thursday, we still have that 1.0725 short-term pivotal resistance. So no change. The euro dollar traded sideways on last Friday. What we could see over here, it's still continue to evolve in the sideways kind of range, but as long as it didn't break above 0.10725, which is going to be confluencing with the 20-day downward sloping 20-day moving average soon as well. We still maintain that short-term bearish bias on the euro dollar. First support level to watch for sure will be at the 1.060 level. All right. However, a clearance above 1.0725 will invalidate this short-term bearish bias to kickstart another round of minor counter trend rebound to expose the next resistance level at 1.0780. Above it sees 1.0820, which confluence with the 50-day and the 200-day moving average, acting as a resistance as a similar level at 1.0820 as well. Now, for the sterling dollar, so sterling dollar plunged lower and hit the support level at 1.23 60, 1.23 70, 1.2380. We highlighted. And what's interesting over here is that the RSI hit the oversold level and it traced a bullish divergence. All right. Okay. Upon the sterling dollar hitting the lower limit of this descending channel, medium-term descending channel that I drew from a minor descending channel that I drew from the high of 8th of March this year. So potentially there could be some signs of minor counter trend rebound taking shape on the sterling dollar using 1.23550 as my key short-term pivotal support level, okay, which is graphically is this congestion area over here. So 1.23550 as my short-term pivotal support level. As long as this level didn't surpass to the downside, potentially the sterling dollar could expose the next near-term resistance at 1.2430. Above it sees 1.2480, which is the minor swing high of 17th of April and 18th of April. Only hourly close below 1.2350 will invalidate this potential minor counter trend rebound scenario to continue its impulsive down move to expose the next support level at 123 figure level. A break below it sees 1.2215 next. Okay, 1.2215 is this minor congestion of 3rd of November and 10th of November. All right, that's for the sterling dollar. Moving on forward will be the dollar yen. So dollar yen on last Friday on last Thursday we do have that bullish bias. So the price action actually came down. That pullback actually took shape and hit right at the lower limit of this minor ascending channel support that I drew from the low of 5th of April, and as well as the minor swing low of 15th of April and 16th of April as well, before staging that bounce to retest its previous week high. All right, so no change. 153.90 short-term pivotal support level on the dollar yen. Still maintaining that short-term bullish bias. Next resistance level to watch will be at 155.10 Fibo extension level, followed by 155.70, the upper limit of this minor ascending channel, and as well as the 1.236 Fibo extension as well. Only hourly close below 153.90 will negate this bullish tone to potentially see a much deeper minor corrective decline scenario to take shape. Next support level to watch will be at 153.30, followed by 152.70, which confluence with the upward sloping 20-day moving average, and as well as the minor swing low of 11th of April and 12th of April. Aussie dollar. So for Aussie dollar, what we could see is it came down and hit the 63.55 support level before bouncing up on Friday. All right, so what's this 63.55 level? Is a pretty key level. Why? Because if you look at the daily chart over here, it's actually the major ascending trend line support that I drew from the major ascending trend line support that I drew from the low of 13th of October. All right, 2022. Okay, 13th October 2022. Okay, so last Friday price action came close to it and shaped a bounce off it. All right, so with that, I'll be using a slightly higher level for today, which is correspond to this congestion area here and the psychological level of 64. So as long as 64 short-term pivotal support not surpassed to the downside, potentially the Aussie dollar could continue to shape another leg of kind of a minor counter trend rebound scenario. Above 64.60 exposes the next resistance at 64.90, which coincide with the 20-day moving average. I think it's a resistance as well, and the former minor ascending trend line from the low of 14th of February now turns into a pullback resistance, also confluencing closely at 64.90. Only an hourly close below 64 figure level will invalidate this minor counter trend rebound scenario to seek a retest on the key support level at 63.55 again. Right, on the Aussie dollar for today. So rather mixed bag as well on the FX pair for today in terms of the short-term technical outlook across the board. Now for spot gold, XAU/USD, it kind of trade within this sideways range configuration. So the upper limit of the sideways range is at 2,420, hit on last Friday before retracing again. So do expect to be within this kind of sideways range configuration. So we will have that bearish bias within the sideways range configuration. Upper limit at 2,420, lower limit will be at 2,327 slash 2,300 psychological, and as well as the upward sloping 20-day moving average. Only an hourly close above 2,420 resumes the bullish tone or the impulsive bullish sequence to expose the next resistance level at 2,450, followed by 2,480 slash 2,490, which confluence with a Fibo extension cluster level. All right, so that's spot gold. How about WTI crude oil? So WTI crude oil continues to actually inch much lower after last Friday pop-up and it traded back below the 20-day moving average. So we could still very likely in the midst of a minor continuation of this minor corrective decline scenario for spot gold, for WTI crude, which is West Texas oil. So I'll be using the 20-day moving average as my resistance for today, 84.40 short-term pivotal resistance. Potentially the next support level to watch will be at 80.80, which confluence with the 50-day moving average. A break below 80.80 exposes the minor congestion area of 7th of March and 13th of March at 78.80 slash 78.40 level. All right, so only an hourly close above 84.40 will invalidate this bearish leg of this ongoing minor corrective decline scenario to potentially see some kind of bullish reversal coming back into West Texas crude oil. First resistance level to watch will be for sure the minor swing high area of 87.70 that has been acting as a resistance since 5th of April. Above it exposes the next near-term resistance level of 89 figure level next on West Texas oil. So with that pretty much sum up today's short-term technical outlook. So in terms of the economic calendar for today is rather, okay, let me do a double confirm again. Yeah, it's a rather quiet day. So except for consumer confidence, in Euro is a flash figure. That means it's kind of a preliminary reading for the month of April at 10 p.m. Singapore time, and followed by 11:30 p.m. Singapore time, we have ECB President Lagarde speaking, and thereafter we do not have any US data that is out next on Tuesday morning Singapore time. All right. So with that, we do have okay, before we go, we do have one data to take note of before the start of our daily dose tomorrow at 11 a.m., which is right early in the early Asia session, 8:30 a.m. We do have the release of flash PMI data for both manufacturing and services for Japan. All right. So with that, that pretty much sum up today's daily dose of market insights. So I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.